Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Anthropic rebuffs investors, pushing offers on funding that would value it at more than $800 billion.
Plus, Meta expands a multi-billion-dollar partnership with Broadcom to design and build custom chips.
And ASML, the supplier of cutting-edge chip-making machines, raises its full-year sales forecast as AI demand fuels growth.
And that demand is fueling growth when it comes to the benchmarks. Today, Ed, despite the ongoing anxiety about conflict in the Middle East, but optimism that some sort of extension to the ceasefire might be found, we are at or near record highs. The S&P 500 is at a new record high. If we hold on to these gains towards the close, we're up 0.3%. The Nasdaq 100 ever so close to a record high that it had last year. We're up 0.6%. But look at the length of gains that we have had. The Nasdaq 100 is now up for 11 straight days. It has increased by 13% over that stretch. It's the longest winning streak since 2019, Ed.
Single movers, this is what's driving the market right now. Look at Broadcom, up almost 4%. Meta's actually also pushing higher. I think that's probably more in line with where the market's at right now. This is an expansion of an existing agreement. Broadcom works with Meta for their custom silicon, and later in the block, we're going to talk to Mandeep Singh, who leads our research at Bloomberg Intelligence. We're also going to take a look at some of the pictures from when I visited Meta and get into detail about what those chips actually are. In private markets is where the big story is right now. Anthropic is drawing investor interest at a valuation of $800 billion or higher. That would be a massive jump from its $350 billion price tag, which was just in February. Bloomberg's Natasha Mascarenhas, part of the team that broke this story. Let's be super clear. This is investors going to Anthropic and saying, you guys should raise money at this valuation. We want to do this. And Anthropic saying, we do not want to do this at this time.
Yes, you're absolutely right. I mean, we've both been covering the AI boom long enough to know that investor interest can soon turn into an actual deal. But in the case of Anthropic, I mean, they closed their employee tender at around half of this new valuation just earlier this month. And so right now we're seeing Anthropic push back on those prices. But these are serious term sheets that we're hearing are even encroaching higher than 800. And investors think
on the valuation.
On the valuation, yes. And investors think that that's a good deal right now.
Natasha, what sort of amount would they want to raise? Could they need to raise? Because as much as they steal all the headlines with ideas that Opus 4.7 is coming soon, according to reporting, or indeed that we're seeing Mythos being very staged, rolled out, there is this concern that maybe it's staged because there isn't the access to compute, and that costs money.
Absolutely. I mean, I think at this point, we don't know the exact numbers of how large the raise could be, but we do know that there is this time crunch that everyone is thinking about when it comes to Anthropic. The IPO, as we've reported, this is a company that has already been a high-profile startup for the past 2 years. But now there's this really real ticking time crunch for an IPO as soon as October, as we've reported. And so I believe that we're going to see new capital talks continue pretty relentlessly until then. It's really just a decision of if Anthropic thinks it needs to secure that capital before it makes the jump into the public markets. To your point, the new model gives a real exact pinpoint reason to where the capital would go at this moment.
Brilliant reporting, as always, Bloomberg's Natasha Mascarenhas. Thanks so much for joining us on all things Anthropic. Let's go from private back to the public markets. So you see Meta up almost 2%, Broadcom is up 3.6%. That's as they expanded that multi-billion-dollar partnership with the chip maker to design and build custom chips to power social media giants' AI ambitions. Bloomberg Intelligence has said that the move, along with Meta's new Muse Spark model, shows stronger confidence in in-house chips for inference, though Meta could face more pressure on spending returns without a cloud business. Mandeep Singh of Bloomberg Intelligence helps pen that note, joins us right now. And just talk to us a little bit, Mandeep, about, well, the desire to custom chips. What sort of edge does it give it when it's already dependent on AMD and NVIDIA too?
I mean, look, the proof is what Google has done with TPUs. And when you think about, token efficiency, there is no better company than Google when it comes to how they have ramped up TPUs for both training and inferencing workloads. And now that Meta is getting more confident about its own model, they have redesigned the pre-training stack over the last 9 months. they feel they're at a point where they are looking for token efficiency. And I think that's where they want to go the custom silicon route. It's worked for them when it comes to recommendation engines. And now they want to do the same on the accelerator side with Broadcom.
Mandeep, I want to look at the specific Meta chips themselves. MTIA, Meta Training Inference Accelerator. These are some images that we took when we visited the MTIA lab last month. And basically how it works is, right, they work with Broadcom on the design and architecture of the silicon, and Broadcom then goes to TSMC. And what this deal represents is expanded volume commitment on that existing technology. You can check out, Bloomberg's coverage of the specifics of the accelerators. At the same time, Meta is a big buyer of GPUs and other accelerators from elsewhere. That part of your research that you say they might be inhibited by lack of a cloud computing business, what do you mean by that if they're such a great buyer of capacity?
Well, so think of it this way. If you are buying NVIDIA chips in volume, you want to rent them through your cloud business because for Microsoft Azure or Amazon or even Google for that matter, it's a big source of, cloud revenue, cloud infrastructure revenue that these companies are generating in their respective segments. For a Meta, if you're focused on token efficiency and you're buying the most expensive chips out there without a cloud business, that makes that ROI equation very hard. And they're at a point where they feel good about their model. They have 3 billion users to serve in terms of inferencing. They want to do it with their own chip.
Is there ever a chance that with excess compute, it does start becoming more of a cloud company, Meta?
I don't think so, just because of the surface area they have with the family of apps, WhatsApp, Instagram, the Core Blue app, 3 billion users. If we are talking about personalized intelligence and, AI agents that really work for consumers, they have, a lot of demand for inferencing that they can use their own infrastructure for. So to my mind, they should have done this probably a few years back in terms of starting a cloud business like Oracle did, with this GPU wave, but probably it's too late now.
Those MTIA chips, what they are used for currently is ranking recommendations in timelines.
That's right.
But really focused on inference. So the idea that they lease them out, you got to come back and get more into that. Mandeep Singh of Bloomberg Intelligence. Top research. Thank you very much. Let's continue with this sort of AI demand story. Look at shares of ASML, down 4.4%. Now, the supplier of cutting-edge chip-making machines raised its full-year sales forecast, but that brought it in line with analyst estimates and attention already turning to what can be expected for next year, 2027. Let's discuss with Tammy Chu. She's the head of tech equity research at Berenberg. So it's kind of this contradiction, right? The headline is like really positive, raising that guidance, raising that outlook. The demand is clearly there. The stock falls. And so it seems like the expectations were high. People are already looking much further ahead in terms of that demand picture. What was your read on it?
Sure. So that's a very good point. So basically, I would say don't forget that to start with, ASML is already up nearly 40% year to date, and semi-equipment segment has been one of the strongest, I would say, sub-segment in tech year to date in this year. So therefore, I would call the set of results reported by ASML today as solid. They raised full year guidance by 4%. The Q1 gross margin was way above consensus expectation because of strong mix. At the same time, they confirmed that they are increasing their capacity to about at least 80 EUV tools from at least 60 EUV tools year on year in 2027. So I would say the set of results has been very strong. But at the same time, as the most, let's say, successful or high-profile tech company in Europe, ASML's always well-earned, and ASML expectation has always been elevated. So I would call today's share price movement as just lack of revision on the back of this solid set of results instead of anything which is worrying.
Tammy, can we just linger for a moment on what you just said? 80 EUV machines. To a lot of people, they'll say, hold on, I don't understand that. This is the world's most important maker of machines in the chip manufacturing process, and they're guiding that they'll make 80 of them. Of course, the context is they're $400 million a piece. Just explain why that number's significant.
Sure, of course. So those tools, you are correct, are sold for 230 million each. So those are probably one of the most expensive set of tool in the market or in the world. And I would say that it's important because we are moving from 60 in this year, and we were at about 40 a few years ago. So therefore, from 40 to 80, they're already doubling that capacity they can serve the market, which is showing that AI demand and memory demand has been super solid over the next, let's say, 6 months or 2 years. And going forward is likely to support the further expansion of AI market or memory market. So therefore, as a result, I would say that 80 number, it doesn't look like a big number, but don't forget those tools are 230 million each, and we were at 40 2 years ago.
Are they in any way supply constrained here, Tammy? I mean, some on the street had hoped to see the number 90 thrown around. Is there a limitation factor to them? Could they be making more?
So in our view, we don't think that ASML will be a bottleneck. You are right that 90 was mentioned previously as the potential capacity number. But ASML has been super careful in terms of building capacity as per customer demand, because you don't want to end up in the situation that you build 90 tools or whatever the number is, but there is no demand for that. So therefore, as a result, I would say that 80 number is a result of ASML's discussion with customers. And that 80 number, for the time being, is a reflection of ASML's agreement with customer how to serve the end market demand.
Yeah.
And I don't think it's a limitation. In theory, in my view, ASML can actually do more if the customer need more. And what ASML has been needing is just to hire more people, expand with their supply chain. So I don't think ASML will be the bottleneck.
Let's talk about the demand constraints or fulfillment, because it feels as though it's insatiable in terms of need for chips and therefore needs for equipment, but they had exposure to China. How has that continued to unfold?
So from a China perspective, China used to be 40% of their business 2 years ago. And now with the non-China business being growing strongly, China is about sub 20% of the total business. And China has been stable, I would say. China was slightly better than they previously expected. And China will be stable in this year. But in this quarter, the full year raise was purely because of non-China business was stronger than expected. So going forward, I would say ASML will be continued to be driven by this non-China business, AI investment, memory shortage to further continue as the case for next few years. And China, I do have the view that China will be flattish, and China is working on their localization, of course. So the demand for China is not likely to fall off the cliff. So therefore, as a result, in conclusion, over the next few years, ASML will be driven by both factors, which non-China business will likely to be the key driver.
Talking about 230 million for EUV. I mean, if you think about TwinScan EXE, some of the people I talk to, you go sub 2 nanometer, they can get 350 million for that. We'll get back to it at another date. There's a big project. It's called Terafab. It's basically on paper, but it says that in the future there'll be 1 terawatt of compute capacity put through fabs operated by Tesla, SpaceX, and xAI. That would, on paper, make them one of the biggest buyers of ASML's equipment. Have you and the team modeled for that being real? Or for you, is it still an idea?
I mean, we would love to. And you're absolutely right. So ASML do have a version of machine which costs 350 million, which is called High-NA. That's probably will be seen when Terafab is ready to take equipment. So for the time being, we haven't put Terafab in our numbers. But as per our understanding, the intention is real, and there has been discussion already within the supply chain about Terafab. But for the time being, it won't be something happening in the significant way from a number perspective over the next 2 years. So therefore, we haven't reflected that. But I do hope that we can put that in numbers in 2 years' time.
We love the numbers. Tammy Chu, thanks for joining us. Head of Tech Equity Research at Berenberg. Great to have you with us. Now, we've got a key conversation coming up with the IMF Managing Director, Kristalina Georgieva. As the IMF spring meetings, they are underway in Washington. We're going out to Francine Lacroix in a minute. This is Bloomberg Tech. Let's talk about where the IMF is right now. Spring meetings are upon us in Washington. Francine Lacroix is alongside the IMF Managing Director, Kristalina Georgieva. Please take it away, Francine.
Yeah, thank you so much. I'm so delighted to be really here by the host of the whole show, where everyone from around the world shows up. Kristalina Georgieva, thank you so much for joining us. Look, the IMF and your World Economic Outlook, everyone here has read it 3 times just to understand exactly what the dynamic is. You've downgraded your forecast, but there's also a scenario where the world economy skims recession. How likely is that?
Depends on the longevity of the war in the Middle East and the scale of the infrastructure destruction that happens in the countries over there. And that is the big unknown. We now have ceasefire. I pray it turns into a durable peace, and in that case, we can see a somewhat faster recovery. But the uncertainty has been profound, and we all need to learn to operate in an environment of high and permanent uncertainty.
But MD, even if there's a ceasefire that stays, okay, and there's some kind of diplomatic resolution, is the market discounting the real impact on the price of oil and therefore inflation?
Well, let me just say that even if the war ends tomorrow, it would take quite some time for the recovery to kick in. Not only because of the infrastructure destruction. Tankers are slow-moving vessels. A tanker that leaves today would take 40 days to reach the Pacific Islands. So we have to keep in mind that the impact is already baked in. Why are markets so optimistic? I think part of the reason is because there is a high concentration of financial assets in the United States. The US economy is doing well. It is relatively not so impacted because the US is an oil exporter, not importer. And that creates that picture of dynamism and vibrancy. But I can tell you that's not the story of the rest of the world. In the rest of the world, already there is a lot of pain.
So, I mean, does that mean that the market is mispricing, that all this market exuberance is actually misplaced?
What it means is that markets are geared by events in the largest economy that are really positive. The United States is the only large economy that has high productivity growth, and markets are seeing that. Technology optimism is here. Markets are rushing on it. But should there be more caution? I would argue yes. Because what we are seeing in terms of supply chain disruptions is already quite significant. And with every day that passes, that tanker is not leaving for a destination, and that delays the rebounds of the world economy.
How much do you worry about governments trying to over-adjust if inflation expectations goes up? And actually, how much of a mess would this be? I mean,
it's such an important question. So look at what is happening. Short-term inflation expectations have moved up, not by much though. We have increased our inflation projection from 3.8% to 4.2%. It is up, but not dramatically. And very important, long-term inflation expectations don't budge. They're well anchored. May they stay this way. So it is very important that central banks act carefully. Those that are in a good position of credibility, they can take wait-and-see attitude. They also have to signal, we are prepared to act if it is necessary, but please don't rush. My worry is because of 22, now central banks may say, let's move faster, and that could be very dangerous because it would suffocate growth.
I mean, we're looking back at every IMF, World Bank meetings since 2020. There's been something. 2020 was COVID. 2022, of course, it was the Russian invasion of Ukraine. Then you had tariffs.
Inflation.
I mean, it's
tariffs.
shock after shock.
So it looks like a layered cake. Shock upon shock upon shock. Except it is not at all tasty. I can tell you that everybody has to absorb reality. And reality is we are in a more shock-prone world. Shocks will continue to come. What does it mean? For fiscal authorities, build buffers. When you are in good time, don't waste your resources. For monetary policy, calibrate policy carefully. Be prepared to act if and when necessary. And everywhere, countries have to be much more alert to the high uncertainty within which we operate. Agility, adaptability, this is what we have to do.
MD, how worried are you about the UK? This was one of the countries that was downgraded the most.
I mean, they are downgraded, but also we see in the UK very mature approach to policy. The UK is very careful not to go into indiscriminate spending, and Bank of England is very clear around the approach they're going to take, the right approach to this situation. Actually, we see the UK in terms of fiscal response as a good example for others, because many other countries are rushing to throw money they don't have out of the good intention to help people. It has to be targeted, it has to be temporary, and it has to be done within the fiscal boundaries of countries, and UK is doing that. UK is also a country where there is a recognition that your best defense is growth. Pro-growth policies are gonna be your buffer for the future.
Yeah, not easy, but certainly
Absolutely
the government is aware of it.
Not easy, not easy.
I also wanted to ask you about, look, the U.S., there's, again, President Trump is going after Jay Powell, saying, look, he'll fire him if he doesn't step down from the Fed. I mean, we go back to this idea of central bank independence. How problematic is it, especially in a time where actually central banks have a very, very difficult job at hand?
We have decades of evidence that independent central banks are an economic asset. They serve well when they have the opportunity to make decisions and the space to make decisions responsibly. And I can tell you one very interesting fact. Central banks in emerging market economies outperform their advanced economy peers. They have built that independence and strength of data-dependent policy making.
Again, market seems to look through a lot of these concerns. Does that worry you that the function of almost keeping things in check is working differently?
On one level, it is good that the economy functions, because getting into panic is not going to help. So good functioning of markets is helping. Having that, we have seen tightening of financial conditions by some, but not by much. We have seen currency depreciation of some emerging markets, again, not dramatically. As long as we have a trajectory for the war to end and for economic activity to restart, we are in a very good place. But if we have prolonged period of time, it will be hard to keep optimistic.
I also wanted to ask you a little bit about some, new countries or old countries that, are trying to access some of your programs. I wanted to start with Venezuela. So is the IMF ready to recognize the acting president to start negotiations?
At this point, Venezuela does not have recognition by majority of members. This being said, we are prepared to engage. Actually, at a junior technical level, we have been approached in good faith by the Venezuelan authorities. They desperately need help because, as you know, the economy shrank from this to 1/3. They have a risk of hyperinflation knocking on the door. 8 million people are outside of the country. So once our membership decides, if and when they decide to recognize, we are ready to go.
Soon?
It is a matter of membership. I can tell you one thing, that there is an understanding among the region, the neighbors of Venezuela, Brazil, Colombia, Mexico, Chile. They don't want a failed state. They want Venezuela engaging with the fund.
MD, thank you so much for joining us. I'll send it back to you in New York.
Francine, a fantastic interview as ever. And we've got more coming from you. Next up, the ECB Governing Council member. This is Bloomberg Tech.
Welcome back to Bloomberg Tech. The European Central Bank is facing a pivotal decision at the end of the month. Inflation risks are building daily as the Iran conflict drives energy prices higher. Bloomberg's Francine Lacroix is standing by with Joachim Nagel, Bundesbank President and Governing Council member of the European Central Bank. Francine.
Yeah, thank you so much, Ed. I'm so delighted to speak to Joachim Nagel. Thank you, Governor, for joining us. Look, you've said that a hike in April is an option if the inflation outlook sours. Are we there yet?
Well, I think it is a very opaque situation. I think, I believe from today, from this standpoint, I would say there's not enough clarity what will happen in April. But I still keep the position that we should have all the optionalities that are necessary to tackle the situation, and we will take into account the data we will have in April, and then we will see.
And I understand things fluctuate, on an hourly basis, but what do you need to happen to support a rate hike in April?
Well, what I see is that this question around the Strait of Hormuz is a very essential one. This is the Achilles heel of the world economy, so this has to be resolved. And I believe this is ongoing, this uncertainty, and this will trigger also uncertainty regarding oil prices. Everything what is going around in the world is dependent on that question. This is a bottleneck, and so I believe 2 weeks can bring a lot of new information, and we will take that into account.
Good information as well, because to be clear, I'm not a military strategist, but at the moment it's very difficult to see a way forward in the immediate term.
Well, I'm not a military expert on that, but what I see is a lot of fog around this question. So, as I alluded to, is changing on a daily basis. So, it's all about geoeconomics, I think geopolitics, and from a monetary policy point of view, it's definitely not a very comfortable situation. I think it developed a little bit better over the course of the last week, but it's still a very delicate situation. And as I said, a lot of uncertainties around this question.
President, a lot of households, right, especially in Europe, will have the memory of 2022, the Russian invasion of Ukraine. Is that what's lifting also inflation expectations, maybe higher than warranted?
I can't exclude this. I think you're perfectly right that households learned from the crisis in 2022. So we have to see how they might react, how their reaction function is. This is one of the things we have to look at. Momentarily, I would say on a medium term, inflation seems to be well anchored, but this can change. So it's really too early to say that we are again on a safe ground. It's a very shaky situation.
What did central banks learn from 2022? There was a lot of criticism that you were a little bit late to the game. Does that mean it gets readjusted in 26?
Well, I would say the situation in 2022 was a different one. We came out of the pandemic. Now when this war started in the Middle East, we were pretty much on our target, so the situation was completely different. 2022, inflation was already high, so it is not the same situation, but we learned something from 2022. We will look at it and we will assess the situation again when we are coming together in Europe, deciding about the future rate path. But there is no pre-commitment where we are going. I think we should have our flexibility here, what we do, and this gives us some, room to maneuver.
Yeah, and again, because the situation is so fluid, there are a number of scenarios, but does the baseline that the ECB has already warrant hikes?
Well, I think the baseline scenario was based on data of mid of March, so now we are here 4 or 5 weeks later. So I would say we are somewhere in between our baseline scenario and our adverse scenario. Now we have to find out where it's going. It's going back to the baseline scenario. I'm a very happy person, but as I said, we should keep our flexibility. I think this is the strength of good central banking, that we should take into account all the necessary information and then draw the right conclusions.
But Governor, if it doesn't go back to baseline the next 3 weeks, is that what warrants a hike? I'm trying to understand. Again, it's a timeline, right? So you're trying to hit a moving target.
I will not exclude one or the other thing. I think this is something, it is too early to say where we are going. And as I said, I need more information about this, keeping optionalities. I have to repeat myself here. And then we will see.
Yeah, I'm trying to push, and you're sticking to your guns. I like that. This is the game. Look, your 2025 strategy review also says that under certain circumstances, preemptive action to avert de-anchoring may be necessary. Were you thinking about a scenario like this?
Well, I think up till now, I do not see any de-anchoring of inflation expectations. So this is good news, but this could change. Maybe it's too early to come to the conclusion that everything is all right. So I guess we need some time. And coming back to my point, as long as the situation in the Middle East around the Strait of Hormuz is not resolved, if there's not a stable, let me say, situation about this bottleneck that is so important for the world economy, the danger is rising that we will see again an inflation push. Uncertainty might go up even further, and this might trigger then a process that could really become very tricky and I guess also dangerous.
Governor, I haven't asked, we talked about hikes, but I haven't asked you about how you would calibrate it. Could you see 2 hikes to 2.5%, sending a message of we mean business, but actually not too much? Well, like baby hikes.
You will not get from me any, let me say, indication. I see what markets are, what is the market expectation. Yeah. Well, as always, I think the market will see how we react in the Governing Council in Europe, and I have to take this very decent approach.
I understand, which is why I love interviewing so much. But would you say that equity markets are off, but actually option markets for hikes are in a better place? Because again, we're not sure what the market is looking at.
I appreciate the optimism of the equity markets. I think it is helpful to a certain extent that there's not more, let me say, turbulence we see from equity markets or stock markets. But again, we should be very vigilant, very cautious, take all necessary information and look what will happen over the course of the upcoming next 2 weeks. And I hope really that we will find a solution how to stabilize the situation in the Middle East.
If you see inflation, and what's your pain threshold for looking at inflation go above target? If it's a bit short-lived, like inflation at 3%, 4%, does that, what's the trigger or red alert sign?
It looks like, at least for the moment, as I said, we cannot say, well, this is transitory or that will stay for a longer period. I will not tackle one number or give you one number that would make
give me two.
that or maybe two that would make me nervous. So it is not a very comfortable situation, but at the end, I believe we will deliver on our mandate. This is price stability, and we will do everything what is necessary to keep the interest rates where they are or change. We will decide on that in 2 weeks.
Governor, thank you so much. It's always such a pleasure to speak to you. That was the Bundesbank President Joachim Nagel. With that, I'm going to send it back to you in New York, and we'll have plenty more from IMF throughout the day.
Francine Lacroix, thank you very much. Let's get back to what's happening in technology and financial markets. The Nasdaq 100 is up for an 11th straight session, 11th straight day. Its best run of gains since December of 2019. It's not quite at the record highs that it hit in October, but it's getting pretty close. And within that, a single name that I've been looking at is Tesla, up for a 5th straight day of gains, best run since September. Now, the story with Tesla is that it's lagged some of the mega cap peers. So a kind of rally in terms of a catch-up makes a lot of sense. But at that gain of 7.5%, it's on track for its best day also since September, Karen.
Yeah, let's focus in on another single name, Ed, and it's on the higher side, but for reasons that are it's cutting up to 16% of its workforce. We're talking about Snap and in push to end years of losses. More on that next. This is Bloomberg Tech. Let's check in on shares of Snap. They are rallying some 9% today, and the company is planning to cut its people. About 1,000 jobs will go, 16% thereof of staff. That's as it pushes to really rein in costs and try and reach profitability. Bloomberg social media reporter Alex Levine wrote up the story. And look, they're also closing down new hires. So that's another 300 that will not be replenished. Is this an AI play, or is this really about just having less people to do more?
I think it's a little bit of both. CEO Evan Spiegel sent an internal memo to employees this morning explaining his thinking around this, and he really referenced what he starting last fall has been describing as a crucible moment where Snap is really having to just move faster, break things, and really push more aggressively to achieve profitability. And so even though he did say that AI is one part of this, I think it's just one part of a larger story for them.
In the memo, Alex, Spiegel kind of outlines that in dollar terms how much money they think they can save, and so go over those details. But they're still on track, it seems, to go ahead with the plan for the augmented reality glasses.
Yeah, I don't have the numbers in front of me, but what I will say is, yes, they are still planning to go ahead later this year with the debut of their first consumer pair of augmented reality glasses. I think, though, one thing that we should really be watching as the year progresses is what happens on the global, national and global regulatory stage. One piece I think that has been really challenging the business for Snap is just this growing push all around the world, including in the United States, to ban social media for teens under the age of 16, to rein in some of the alleged addictive features on the platforms, as we've seen in some of the trials that are playing out in California. And I think all of those are sure to sort of hang a cloud over any of the other exciting announcements and progress the company may make throughout the year.
You said in the memo that the job cuts and hiring pullback will cut or reduce Snap's annualized cost base by about $500 million by the second half of this year. Bloomberg's Alex Levine with the details on Snap. OpenAI is giving a select group of users access to a new AI model to help them find cybersecurity vulnerabilities. The move, of course, comes just 1 week after rival Anthropic announced the limited release of Mythos due to concerns it may be capable of powering cyber attacks. Let's get the latest with Bloomberg's AI reporter Rachel Metz. And it speaks for itself, the timing. But what do we need to know about OpenAI's offering here? Who it's being made available to is also an important point in the context of how Anthropic handled their rollout.
Sure. So OpenAI started this program back in February, actually, where they started allowing a trusted user base, a very small number of people at the time, to try out some of their models that they were going to be making available that would be tuned more toward finding cybersecurity vulnerabilities and probing for these kinds of things. And now what they're saying is this new model is going to be helpful for people in this program, a subset of people in this program, to look for these things, kind of similar to what Anthropic is doing with Mythos, and they're allowing also a limited number of people. So OpenAI is going to have just a handful of people. I think they might have said either dozens or hundreds initially, and then they're going to enlarge the number of people that are allowed to access this model, but it'll still be like individual cybersecurity people and then some companies that they work with, that kind of thing.
I think that's a really interesting, different way of doing it than the Mythos unravel, because we're seeing people coming on this show, the smaller cyber focus, who haven't got access, really want to be able to help plug any of these vulnerabilities. But also what's notable is OpenAI had set up this sort of cybersecurity program that people could go and apply for months ago. It was back in February, wasn't it?
Yeah, I mean, they've been working on various cybersecurity related things over a long period of time. This new model that they have, they're saying this is fine-tuned to be especially meant for finding cybersecurity vulnerabilities. And it also is a little more permissive in the way that it lets people use it to look for those kinds of issues where like a normal model that you use with ChatGPT, for instance, might not be able to do that. So it'll be interesting to see what kinds of things people say that they're finding, who's using it. We still don't really know about who is being enabled to use this model, and also like how that compares versus people that are using Mythos, which it sounds as of yet like there are really some varying results and opinions on that.
Rachel, just a few basics. Is this model that OpenAI is making a limited release of in the cyber security context an open source model, or it's closed and just being made available to a small group of existing customers? That distinction I put to you because like people that come on the show basically argue that this is why open source works. In this context, if you want the market to be able to test vulnerabilities, that would be a good method quickly.
Yeah, I mean, I think that, well, this is not an open source or an open weight model. And part of the reasoning behind that could be that such a model could also be used to find vulnerabilities in other people's systems. So it'll be interesting to see how widely they open the access going forward. But for now, it is to a very select group of people for OpenAI and also for Anthropic's Mythos model.
Bloomberg's Rachel Metz across the OpenAI story. We really appreciate it. Look, let's turn our attention to Thoma Bravo right now because it struck a strategic partnership with Google Cloud to help its portfolio companies accelerate, you guessed it, AI adoption. The arrangement will allow the portfolio companies to access Google Cloud's AI platform to improve product offerings and for Google engineers to really embed with those businesses to help solve technical challenges. We're seeing this more and more, Ed, with OpenAI, for example, and some of the other portfolio companies within Thrive.
Okay, coming up on the program, California billionaires are stepping up their efforts to get Silicon Valley darling Matt Mahan elected as the state's next governor. We have the story next. This is Bloomberg Tech.
Time now for Talking Tech. First up, China's Unitree began selling its cheapest humanoid robot on Alibaba's AliExpress, really expanding its international presence. It will be sold to markets including the US, seeking out customers in Tesla's home market at a time when the US company is still developing its humanoid Optimus product line. Plus, Alibaba, for its part, is also getting into robotics and plans to develop and sell its own four-legged model, which would compete with Unitree's Go series. The Chinese company's AMAT unit is also exploring the feasibility of humanoid robots. And Accel, that's the VC firm that has backed the likes of Anthropic, Cursor, Perplexity, but it's raised $5 billion in new funds to keep up its big bets on AI. Now, the firm will be dedicating $4 billion to its fifth Leaders Fund and $650 million into a sidecar fund to selectively increase the size of certain bets, Ed.
Okay, there is a vacuum in the California governor's race left by the abrupt exit of Eric Swalwell amid allegations of sexual assault claims which Swalwell denies. In his absence, tech billionaires are pouring money into the Democratic campaign of Silicon Valley darling Matt Mahan, the mayor of San Jose. Let's talk through it with Bloomberg's California reporter Eliyahu Kamisher. This is getting a lot of attention, a lot of readers. It's a key race. San Jose's mayor is a name that's come up a lot in the last few months. What's changed? What's new? And what are we learning about the pool of people backing him?
Yeah, well, San Jose's Matt Mahan, after Eric Swalwell exited the race, has seen kind of a rush of some of the wealthiest people in California coming in to support him. So we have...
And these are tech people, some of them.
A lot of tech people. We have Vinod Khosla, who put $1 million towards his campaign yesterday. Mike Moritz of Sequoia. Reed Hastings of Netflix. Really big names in Silicon Valley and in California have coalesced around his campaign, and they're backing an outside committee. They're sending millions of dollars towards him. Yeah.
Why do the billionaires like him so much? What is Matt Mahan really thinking about for them?
Yeah, well, Matt he emerged on the scene first when he opposed a wealth tax that's being proposed in California. There's a proposal to tax billionaire wealth, and that kind of helped him gain some of these supporters. But he, in a wider sense, I think Silicon Valley is trying to insert itself in California's political scene beyond just the issues that their singular companies care about, and more in kind of a wider sense, they're trying to promote a moderate democratic policies as they see it.
So that manifests itself in another way. Very quickly, you wrote about this $500 million fund to influence California politics. That was on March 12th. But again, tech names are putting into that fund.
A lot of tech names. If you know Neil Mehta from Green Oaks Capital,
right.
A lot of VCs they're coalescing. There's kind of this network effect. I mean, Sergey Brin, the co-founder of Google, has been big in creating his own interest group to influence California politics. They're all about trying to kind of create government in California that is a little less progressive, more in the moderate sense, a little more anti-tax, and is about kind of creating efficiency and a little more pro-tech as well.
Bloomberg's Eliyahu Kamisher, thank you very much indeed for the latest on politics. Now, somewhere else in Silicon Valley, something's going on, because we're going to take a look at this stock, Allbirds. Shares going absolutely bonkers. Why? Because the former shoemaker, just days away from ceasing operations, says it's going to pivot its business into, guess what, Ed? AI compute.
Yeah.
infrastructure.
No,
so
don't
Silicon
undersell
Valley
it.
loved the shoes, and now they're going to love their GPUs. Is that the sell?
Yeah, rub your eyes, code, adjust your set, whatever we usually say. That is a one-day chart, right? Am I reading that correctly?
It's going from not much to just $20, let's call it. So, yes, 700% is extraordinary, but it's got $50 million in financing to basically build out AI-native cloud data centers. It wants to be a neo-cloud.
Yeah.
Ed, $50 million isn't that much.
Yeah, GPU as a service, or GPU as, like SaaS. Meta's going to spend what in the next 3 years on AI? 600 billion, 50 million. I don't know how they're going to launch a business, but no surprise, this is the most read story on Bloomberg right now.
The most read. And what's the rebrand going to be? I think they're going to be called Newbird AI. How's that for the rebrand of Allbirds rebrands? That does it for this edition of Bloomberg Tech.
A lot of news flow coming from Bloomberg, some interesting market moves, and some important interviews around the global economy as well. Recap all of that on the podcast. You know where to find it. If you're watching the show, it's there on your screen. If you're listening, iHeart, Spotify, and Apple. This is Bloomberg Tech.